Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So actually here we have also really minor changes compared to recent picture. Gold has trying to move higher and actually has touched the upper border of the confluence around 1803. It's climbing on the background of the preparation to the common CPI numbers. So as I today already mentioned in the Forex report, yesterday it was important statistics released, but it was a bit missed by the investors. They paid no big attention to it, although in the current situation it's really important. I'm talking about the labor cost data and productivity. Usually productivity makes barrel impact on the market performance because it changed very slow and small, but recent data shown that productivity dropped almost for the 5% on a quarter-over-quarter basis. It's really a huge collapse in the productivity, and productivity actually has really big importance for economy, because as higher productivity is, as more you could raise wage to the employees and to increase its wealth, and it's without inflationary pressure. So you could just add more money in the system, in the economy, without rising inflation, because it's backed by the rising in the productivity. Labor cost is a leading indicator compared to CPI, and it has shown 10.6% of the wage inflation. So this is really high change and big change and high levels of the inflation in the labor cost, and together with a massive collapse in productivity with the rising cost of the labor cost, it is double impact on the economy, and this impact on both sides is inflationary. Of course, it doesn't mean that CPI today definitely should be greater than expected, although in the longer term we do not see reasons yet for decreasing on the inflation. But this is really worrying data that we've got recently, and actually by these indicators you could see currently drop on the stock market. So it's important. Speaking particularly on the gold market, on the technical side, it's not many things that we could do. Mostly we have the same situation currently. Our overall background stands more in favor of the bears, just because market stands at strong confidence. Market comes to major target once all the stuff will be touched, and if CPI numbers will be in a row with expectation, that's 8.7%, because it's already slightly lower than the last month when we've got 9.1% of the CPI. Or if even it will be even smaller, that supports probably bulls, just because it suggests no necessity for the Fed for aggressive rate change, and that probably could support the gold. While the opposite action, if we will get high inflation, especially on the background of the high payrolls and good situation in employment, that just led Fed to act more aggressively. It probably will be the background for the bears. So technically bears stands in a good position where they could waiting for a CPI once numbers will be released, then see what will happen in this area, what patterns will be formed, and think about taking short position, because based on the overall technical picture it suggests that some pullback here could happen. In lower time frame, not many things to discuss. So as we said, scalp traders could try and take long position on Monday. Yesterday it was ability to take position based on the butterfly that we discussed. So just you could hold stops at the break even, hold the position and wait for the market hits the 1806 target. Then keep an eye on the CPI numbers, what will happen. So because as you can see, overall background is preparing for some reactions, because we have here the rising wage with this potentially bearish patient divergence as well, and it's around a very strong resistance. So technical situation stands in favor of the bears. On the hourly chart, currently it's difficult to call about the butterfly because right wing was very small, just minor retracement, the market move above the top. But still we could keep extension of this most stressing swing. It's 1803, the first target, next one 1813, and the XOP stands right between them, between 1806. So hopefully on some volatility market completes the XOP, and then bears could get clarity what will happen next. And probably market should form some pattern here. So let's see what will happen on the report, and that led us to, well, understand in what direction market should move in until the end of the week probably.